Good evening. This is the Eye of the Storm podcast with the big picture technical update for the NASDAQ 100 being recorded on Friday, April the 19th, 2024. It was a pretty good week. The markets really gave us a lot more data to plug into counts, into all kinds of algorithms to begin to make sense of what we're seeing and how and why it's happening. Tonight on the podcast, what I'm going to be discussing, again, I've narrowed it down now to, in my mind, I have two preferred counts. Each still really honestly have a 50% chance of being the active count. One I showed all last week and I presented last Saturday, and that being that what finished up here at our highs, at our most recent highs, was minor wave 3 of intermediate wave C of primary wave B, which suggests that we still had this correction to do and maybe over, and then we still have a minor fifth wave up that'll take us to, again, new all-time highs. So that would be what's waiting on the other side of this move. Now, I will also say that it is getting a little bit sticky in terms of how much more can it drop before it invalidates that count. And I'm going to talk about that a little bit. Right now, it has not. But the count that the other side, the preferred count, is the one where the primary B wave is complete. So in other words, what at that high, that recent high, it was a minor fifth wave, it was an intermediate C wave, and the primary B wave. They're all done, and we have started lower on the beginning phases of a primary C wave down. That's the one I'm going to update tonight. Actually, I'm going to update both, but the one that's on the charts and has been labeled is the one that would suggest we're now in a primary C wave decline. So again, let's start there. I'm on the cash market. What's inside a primary C wave? There are going to be 5 waves of intermediate degree. In this case, they're going to be 5 waves of intermediate degree heading lower. And they'll be labeled 1, 2, 3, 4, 5. What will be inside intermediate wave 1 will be 5 waves of minor degree. And then what will be inside minor wave 1? 5 waves of minute degree. And that's basically where I'm starting my count. One step a little bit lower. And so let's kind of go into that to realize that here we have the cycle wave 3 and the 5th of intermediate degree, the 5th of primary degree, cycle degree 3, and now we had primary wave A of cycle 4. I believe we, according to this count, would have completed primary wave B at the most recent highs. That's 18,464. This is basis the cash market. So then from there, we have started to come lower. So I'm going to move this down, take a look at the daily chart. We can still see we have the A, the B, the C, and what I've added are the fibs for primary wave C. So basis the cash, we would be looking at 1.618 or there in the region. But what the count would require is basically for wave C to break below the low of wave A, and that would be in 2022 October, and that low was 10,440 basis the cash market. So I'm looking for that to go below that. How far below? Well, we go back and we take a look at the fact that, well, we had an irregular B wave. So the market did produce several times new all-time highs above what we saw in January of 2022. So that's when the market basically finished up at 16,000, I believe it was 848. I'd have to go back and look. But in any case, we have. So there are those instances where we have an irregular B wave. And this is one of them. So when we have gotten to, which I believe we haven't in the cash market, got to that 1.382 level, that would be most common for a primary, for an irregular B wave. With that in mind, the subsequent C wave then should trace 1.618 times the length of wave A. Again, wave B rose, went up 1.382, and the equivalent then on a downside move would be 1.618 on a fib basis. And that number is 8,232. Now, again, I'm just looking for it to come below 10,444, 10,440. So basically kind of in there, doesn't necessarily need to go below 10,000. It can if it goes full bore. Much more on that to come, right? Because it's a little bit early to be discussing, gee, I think that's where it goes. There's a lot of market to trade in between. These are just the initial fibs. Got a lot of support and a lot of trading to start this whole thing. So I'm going to drop it back down. I'm going to go down to the 4-hour chart here in the cash. And there we have 1, 2, 3, 4, and then the 5. And wave 5 was a diagonal triangle. So that all stays the same. Then we drop it back down. I'm going to go to the hourly chart. Now we can start to take a look at how we can account this inside. Again, there's the high at 18,464, almost 465. And then we have wave 1. I'm calling minuet wave 1, minuet wave 2. So I'm starting to go with the minuet degree. My first wave down would become minute wave 1. So 1, 2, and now we're breaking down into the third. 1, 2, and then it breaks down again. 1, 2, 3, 4. 1, 2, 3, 4, 5 of 3. And that would be actually, it could be this is where it gets really interesting, because in the futures market there was of course another hour of trading, and so there's something else you could see. But here we have 1, 2, 1, 2. And then 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3. So there's likely still, before this third is over, a 4 and a 5. But we may also consider that the third is done here. And in which case, then what do we get? We get a fourth wave bounce. So we can immediately just go over and add the fibs for that. Now, if we get a fourth wave bounce over this, most common would be a bounce back to 17,500 in that area. But it could also come in a little bit lower, it could come maybe a little bit higher, depending on how hard they decide they want to come in. And it really should begin pretty much when Globex opened. We should start to get it. Now, if not, then what we really have is that additional, because this does not, at one hand it looks complete, and the other hand it does not. So if we're coming down, we got 1, 2. 1, 2, 3, 4, 501 maybe. It's like 1, 2, 1, 2, 3. Yeah, it could almost, it's a lot of 1, 2s coming off, which really kind of suggests that this is just going to go and go for a while. Now that fits this particular count. So, but right now I'm going to leave it as that this is wave 3, and that we're going to have a fourth wave bounce, and then an additional fifth wave down, and that will put in the first wave of minute degree for here. So, and then we get to do it all over again in terms of a 1, 2, and then a larger 3 and a 4 and a 5. So that's the layout if we're just going to continue to decline. Now, again, if you listen to both podcasts, I go into more detail. Like, there's a lot going on. We have that active situation in the Middle East, and that is enough to spill guts all over everywhere in terms of what the market can do. They're trading barbs, but they're also trading missiles, firing missiles at each other here. And several where Israel retaliated and hit Iran, Syria, and those two. So in any case, that is an active situation. we also have just everything else that's kind of going on. We're now coming into earnings. Now, today, what did we see today? We saw the decapitation of a lot of what I used to call froth, what you could call premium, what you can call um, directional volatility. Just really got decapitated today in stocks like NVIDIA, Supermicro, Computer, SMCI, in Netflix due to earnings, in Meta due to a news story that Apple has discontinued Instagram in China sales. And bam, they hit Meta. So the froth, the over evaluating, the overbought has got corrected real quick, and we had a very steep decline in the NASDAQ, with the NASDAQ itself, cash market, being down 356, future ending down 368 in that extra hour. So this becomes more preferred in that, let me go back down to that hourly chart and say, if this is a 5 and this is a minor 3, we'll talk about it now, get it out of the way. Then what this would be is A, B, and then we got a C wave. 1, 2, 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of 3, 4, 5 of C, and then it comes too far. It really comes too far. So if I leave this A, B, 1, 2, and I can stick a third wave there, and we got a 4 and a 5, okay. All right, that likely would be acceptable, but it really starts to get down where it shouldn't go. So in other words, that's all the way down here, but I just think that it really should not be dropping too much further before it just starts to get really kind of ugly and disqualifies a minor fourth wave. Okay, so originally I thought maybe here, then originally you kind of put here, and it's just solidly just going all the way through. So it's kind of come down to the area of the previous fourth, right? 17,000. Where did we get today? We got down to, come on, show me that low. Right there, 16,973. So it's kind of come down below, but that's okay. But it needs to stop here. That's kind of my point. So the minor 4 is kind of on the line all of a sudden. It needs to kind of stop, and just, if it's going to happen, we're going to see them really come right back into NVIDIA. If they're going to come right back into super microcomputer, they're going to come right back into Meta. They're going to come right back into NVIDIA. They're going to come back into Netflix. They're going to come back into Tesla, maybe. But guess what? It's still earnings, right? They've just begun. So this could really just unfold in a big way. And that's going to take that minor 4 out the door and replace it with this being a primary C coming down. And then that's just beginning. So I've got to leave both open, though. But there's the kick. The kick is that if it is minor 3, and this is the minor fourth wave correction in ABC fashion, a little bit more, okay, possible, but should not get out of hand. So if we get another downturn, or if it just really gaps lower again on Sunday, well, then you have to start leaning towards the other, towards the one I'm showing versus the minor 4. So I'm going to go back out and take a look at that. Because what we have is we start to look for, well, where can we find support as when this thing is coming off? So let me drop back down to the hourly chart, and we start to look at that we have the 4th, and then we have a 5th. And once I get that, a 4th wave in, then I can run 1, to 4, and we can map out where wave 5 is going to find support. And we're not going to have the do not break zones, because it all can break, because that's the direction. But what we're seeing is beginning to help us determine, or help me determine, that the direction is down. If it stops here, then I got a 1, 2, 3, and then ABC, and it's got to go. It's got to go. It can't hang out. It can't futz around. It can't go down, futz around, and then it's go. Now, watch. That's exactly what it'll do. Make a fool out of me for saying it and do exactly that. So again, algorithmically controlled, but also there are other technical factors. When we take some of the information and the data that we get, very well done data that we get from Spot Gamma, there is that possibility that we just ignite and go up. And that has happened in the past before, particularly after a big knockdown, drag out day. We see where the market recovers immediately and they just pour back in the following Monday. Now, this was a big April expiration. Money-wise, gamma-wise, it got pretty big. And so that aggravated a lot of things. Put walls got broken. I believe that the put wall in the Qs got smashed, and the Qs ended down. At one point, they were down more than 9. Ended up just down 8 3/4. But that's a pretty big move for the Qs. And it smashed through its put wall. And then we got acceleration and a lot of the selling. I believe the same thing happened in NVIDIA. I believe the same thing happened in Supermicrocomputer. I mean, the same calculations, you can find put walls in individual stocks because they have volatility. I mean, we use the ones that are connected to the SPX, to the bigger index, because actually when that thing goes, it's usually because a lot of the individual stocks within it have already triggered. And that just kind of pushes the index right over there. And we get more of that next week. We're going to get a lot of damage right away, and it's all going to come out. And then we finish a wave 1 down, and then we get, so in other words, this all works out to be a wave 1 down. So we got a 1, 2, that's a 3, and a 4, and a 5, and then that forms minute wave 1. So can't really tell just yet, because we're looking for this a little bit of a runner, not a runner, but a 4th wave, and then I'll be able to connect and we'll get levels down here. But I'll tell you what, if it comes up 382, you can give a guesstimate. And that guesstimate would be, if we connect this, no, that's not right, this to this, sorry. Then wave 5, well, has the potential. The first one is equality, 17,040. That's not going to be good enough because we've already been below that. So that pulls up 618, 16,754, 2.618, 16,292. Ouch. So we can get another severe day where they come in and they knock even more down. You know, just start cut. All right. So that is the cash market. And let's go take a look. Now, everything that I presented also, just outside of the Elliott, stands for the NASDAQ as well, by all means, of course. And again, the most important thing that I did notice today was that I'm calling it the decapitation of I call it froth like I did before, but it's just overbought. It was really overbought. And several times it got overbought. And even the RSI on my 4-hour chart, and so it does go up and go down, and you could see how much it's been oversold, how much it's been overbought, and it always corrects itself. But this kind of gets extended now. And if it gets to a level where it just basically stops, but you can see we've had other times where it's gone further. That may happen here. So we can get lower lows, even though it stays oversold for a little bit longer. And then we get pushed, and then we rally. But and then again. So into the futures market, it is the same deal. 1, 2, 3, 4, 5, minor 5, intermediate wave C, primary wave B. Then we open it, we open it up and we can start to take a look at what this looks like. A little bit different, because it started with an expanding diagonal, wave 1. And a lot of people may say that that doesn't exist, but it actually does. And then we get a wave 2, and then we start on the 3. Now, again, if it is minor wave 4, it is still a diagonal, but it's an A wave. This is a B wave, and then this is the C wave. 1, 2, and then I got 1, 2, 1, 2, 3, 4, 5 of the internal 3. So this is wrong. Okay, let's do it again. Watch. Inside, we're counting a C wave. 1, 2, or third wave. So 1, 2, and then the 3 of 3 breaks down. 1, 2, 1, 2, 3, 4, 5 of 3, 4, 5 of this 3. So I was off by 1. So watch it again. I know this is not that easy. So I'm going to remove that for right now. 1, 2, 1, 2, 1, 2, 3, 4, 5. That's the third. 4, 5 of the third. So I gotta break this one more time, folks. This should really be 1, 2, 1, 2, 3, 4, 5, 3, 4, and then we get a 5. So the NASDAQ does have more to go before even this little stuff is done, even before this minor wave 4 would be done. And now we're getting too close to breaking below 17,000. I'm just like, that to me is a little bit. I mean, the cash is sitting right there. Cash closed at 1703. And so it's just right on that precipice of just dropping again. And now the count does show it. So if I did it correctly, this is not even here yet. I'm going to leave it here because it does finish a third, but the internal third. And then we get a 4 and a 5, and then a 4 and a 5. So again, if you just walk it all the way through, this is how the market is trading. It's subdividing. It's cascading and subdividing all at the same time. We have 1, 2, and then we're in the third and it starts to break. 1, 2, and then again 1, 2, and then again 1, 2, 3, 4, 5. So there's just that third. You see how clean that is? 1, 2, 3, 4, 5. That was the 3 of the 3 of the 3. So collectively, when you put this all together, it becomes one big. The third becomes much bigger, and then it therefore becomes the longest and the strongest. It's subdividing twice inside of the 3, the minute 3. You have 1, 2, 1, 2, 1, 2, 3, 4, 5, 3, 4, 5 of 3, 4, 5 of 3. Then we get another 4, and then we get a 5, and then this would be done in terms of minor wave 1. So the NASDAQ argues a little bit harder that it's done. It's done, and now we correct. And they did a big chunk of it today. But mind you, they just took stocks like NVIDIA from 900 down to 760. I'm going to say, well, that was a lot. Yeah, it was, but you didn't think that on the way up. You were like, yahoo, look how much money I made. Hopefully you took your profit. Because now it's not time to pay the pop or anything like that. That's the other thing I talked about a little bit, is how we want to look at this in our mindset. If we look at it purely technical, your P&L is just going to kind of follow. It's not a matter of, oh, good, that these bulls are going to get their asses kicked. And who cares? Who cares? And how do we know? If you're a dealer, trust me, you're hedging. You might get caught because you didn't hedge totally, but these are big traders, big trading firms. And so this, what happens, tends to really wreak havoc on retail, of course. And so there's just a lot of people that are just kind of throwing their money because they keep hearing NVIDIA can't go down. This one can't go down. It only can go up. Blue skies ahead because this is, artificial intelligence, et cetera, et cetera. So, but I don't want to focus on that because then you miss out on the trading. I don't want to focus on the fact that, hey, Iran is threatened that if they're going to strike back, they may include a Israeli nuclear plant. Well, that's kind of comforting, right? But why do I want to focus on that, the negative? It also will affect your trading. It also will affect your mood when your trade doesn't go your way. So I prefer just to kind of stick to the technical and kind of go from that basis. And I do actually have some positions. I am buying certain stocks, but they are for the longer term, and I'm not risking a lot on the trades. So, but I also have um, options positions, and those are easier to handle, and those are easier to do, and they're playing all directions. So, having said that, I'm going to concentrate on the technical picture. I'm going to concentrate on what's in front of me and just trade. Because the objective can't be that I'm going to worry about what's going to happen in the world. The objective has to be, well, I want to earn some money. And I can do that by just trading without the worry, without going, oh my God, this should, look at how amazing this is. Start utilizing it to your advantage and don't worry about the rest. It's going to happen no matter what. I'd rather be not pleasantly surprised because I can see it happening in front of me, but I'd rather be give the benefit of the doubt that the world is not going to end, and I might as well collect now. And when things calm down, oh, good, then I've got a little stockpile, and maybe I take some time off, et cetera, whatever. All right, back to the NASDAQ. In the NQ, again, a little bit different of a count, but 1, 2. So we now can see this 3's got to go. I got to put this down here a little bit because it's got more to go. And again, let me go 1, 2, and it's 1, 2, 3, 4, 5 of 3. And so this 1, 2, 1, 2, 3, 4, 5. And that's what we're doing. We're just getting a 4 out of, let's put it here, down to here. So we're going to get a little fourth wave, 17,447, maybe 17,550. And that's going to be the internal. Even this guy's got to go. So I'm going to take these off for right now, to be honest with you. And I will fill in that blank. So it's just going to be a gold. That's the color I use, kind of a golden color for the 4. So it'll be 1, 2, 3, and then a 4, and then we get the 5, and that's this 3, and then we get another 4 and another 5, and that's this 3, and then we get another 4 and another 5, and then it's the minor wave 1. So we got a lot to go. We got a lot to do. All right. So moving averages, yeah, of course, to see how they've all kind of lined up to go down. And that's the other thing. They're really pointing hard down on a 4-hour chart. Let me go look at the daily chart, just kind of see what that looks like right now. Well, we've kind of broken them all, except the 200, and the 200 sits at 16,858. Trust me, if this starts to break 1,700, that's the target. 16,048 becomes the target. 16,850 becomes the target. And algorithms get programmed in that. I think that's probably where this 3 might end up. And then you kind of see that even no matter how I would count this, it's starting to break ugly. I mean, still, you get the minor. If I leave minor 1 here, which I probably would, then it can't break it in a minor 4. I'm going to say it's there. 16,636. And that's not too far from that if we're getting all these 4 5s, 4 5s, 4 5s. Right? So remember, 1, 2, we're still inside this 3. And in that, I got a 3, 4, 5 of this, 3, 4, 5 of that, 3, 4, 5. Do I think I can get below this? Yes, without a problem. And that puts this count into effect. All right. Now, I think I'm going to wrap it up because I don't have too much more to say. Today was, again, an interesting day. Let me also say one more time that we do have a trade room, and you've heard Sasha Goring on my updates on these podcasts, and he will be back. He's been busy, I've been busy, and so it's a little bit harder to put together a time over our weekend. Since Sasha lives in Germany and I live in San Francisco, there's 8 hours right now going on, almost going to turn back into 9 between us. So we have to be pretty particular about, okay, let's try to get this together at a time when we're both solidly awake and thinking. So with that being said, we do have a trade room and we do that together. And I admire Sasha's Fibonacci work, and so it's very tight. And again, it's taking stuff that we both are doing on a daily chart, 4-hour chart, hourly chart, but breaking it down to a 15-minute, down to a 5-minute. We're getting down to the nitty-gritty, and we're really counting and putting fibs around all of these intraday moves. And many times Sasha's fibs are hit on the nose, and we get a reversal. So it's trades that are really profitable. So again, we do have a trade room. We're opening it up to additional members. I normally have an open mic policy, but the more people that do come in, it will be more where it won't be a lot of chatter. It'll be more just actually focusing on the trading, and we'll have a chat function where if questions can be asked and then that Sasha or I can answer them. And we're on Discord, and we meet each day for 2 hours, and it's 6 a.m. to 8 a.m. Pacific Daylight Time. So I live in San Francisco. And so I normally would just give a quick overview on the bigger picture, and then Sasha jumps in, and we meet on Discord, and Sasha jumps in and goes over his count, which is not always exactly like mine, which is also very favorable to a lot of people. And so we present and then do that detailed look inside to set up for the day. Now, $2.99 a month. The other thing that I attempt to do here, folks, and we trade the NASDAQ, and I want to add the S&P, more people to come and say, hey, I'll come and join you, but I trade the S&P, then you're done, and I'll be able to start trading the S&P again. So right now it's the NASDAQ. But my goal is I charge $2.99 a month for the trade room. My goal is to make $300 a day. So if you join, I'm hopefully within the first couple of days that you're there, I have earned $300 and you have earned $300, and therefore you're paying for the trade room. And I try to do that each day. All right, this is where I'm going to kind of put this down. And the next update will really be the Elliott Wave update on Monday, and that will be the 22nd of April. Have a great balance of the weekend, everybody, and make sure you get outside a little bit, take a break, think about yourself, and have a great weekend.